Good morning. Welcome to the weekend general update for the 1st and 2nd of December. And again, pretty important week last week. Even though stock markets didn't move a great deal, there was still quite a bit of action that was very important. So let's have a quick look at the action for the week. Just a reminder about the general advice nature of this information. So the S&P ended up rising 7 points on the week and broke through some key resistance levels, and I think that's the main point that I wanted to make. There's still a lot of people out there that are saying that we're going to get a market crash, or the market's going to decline, or the rally's not going to happen. And I don't know what it is that they're looking at, but frankly they're not looking at the facts, and they're certainly not looking at the charts, because the charts are showing a great deal of strength. And when it comes to America, they're really missing the profitability of corporate America and the new drivers that are going to be extremely positive for American industrial companies. You've got a resurgence in housing, you've got jobs growth, and you've got this new energy revolution via shale gas and shale oil. So there's an awful lot of things that are turning positive in America. Stock markets always look ahead, and so I think the strength of the rally that we're seeing is to be expected. There's a huge amount of cash on the sideline waiting to come back into the stock market. There's a huge amount of cash on the balance sheets of some of America's largest companies that could engage in share buybacks and special dividends. So there's a lot of reasons why stocks are going to be attractive throughout 2013. And we'll also have a look at the Nasdaq and the Russell 2000 index, and those indices do tend to lead the market, and they've been extremely positive of late. Now the ASX 200 gained 93 points on the week, and that was largely the continued strength in the banks and a bit of a rebound in BHP and Rio, and also Telstra is still going along pretty strongly as well. So a good week for the Australian index, and it was really across the board, the increases that we saw. Now the US dollar slightly lower, so it did rebound 50% of its decline and certainly appears to have rolled over now. Now again, there's still a lot of people pointing to Europe and indicating that things aren't good there, yet you look at the actual fundamentals of the market, and the Spanish 10-year bond yields now are down to 5.3. It wasn't that long ago they were over 7, and the Italian yields, which were over 6, are now down at 4.49. So when you actually look at what markets are doing, the fear in Europe has receded, and it's business back to usual. Gold ended up dropping $38 on the week. I did read that there was a very large futures contract on the short side. You've got to expect volatility in gold, because there's certainly some very powerful vested interests who do not want to see gold rise too far. So eventually the market forces will win out, but there will be these sharp drops every now and again. The gold stock indices eased a little on the week, and copper rose to $3.62, so looking very positive again as well. So let's have a look now at the S&P 500 index, and you can see that we went straight through the 38.2% level. We stopped at 1409 for a couple of days. It then reversed very strongly on Wednesday and went straight through that level as well. We haven't quite made it yet up to the 1425 level, which I would expect to see a bit more of a pause in the market. But when you look at the strength of this V-shaped rebound, that really is indicative of a lot more momentum to come over the medium term. Now if we have a look at the Nasdaq, you can see that's even sharper. So the Nasdaq index going extremely well, and then when we look at the Russell 2000, we see the same sort of pattern. Now I can tell you, when you see small and mid cap stocks rebounding in this very, very sharp V-shaped recovery, it almost always leads to significantly more price rises to the upside. So that's why I'm so positive on the markets. Now the Aussie market, this is the Aussie index. We've had gone up almost in a straight line now for about 10 or 11 sessions in a row, so looking very positive. And as I said, pretty much across the board. Now silver had a good week again. Up until Friday, there was a little bit of a pullback on Friday, and again, you've just got to recognise that there are forces in the market that have a vested interest in not seeing gold and silver rise too far. So they are going to take the opportunity to try and beat this price back down. But the fundamentals will win out, and the fundamentals are pointing to higher prices. This is gold. We lost a few dollars on Friday night, but it's still looking reasonably robust to me. We're just consolidating underneath this resistance level, and I think once we get over about 1790, then we'll have a run back up towards the all-time highs, and this is the seasonally strong time of the year for gold. Just looking at the actual gold stock indices, they were down a little bit on the week, not a great deal in it. So the gold stocks really still haven't joined in as yet, but they've certainly moved up a significant way since the lows in May and July. Now copper, as I said, rose to $3.62, which is a real positive, a real indication about the health of the global economy. If the global economy was as sick as some people would like you to believe, then there's no way that copper would be at $3.62 a pound. Oil, I don't place a lot of emphasis on the movements in oil because it's so political. Yes, there are fundamental drivers there to do with the health of the world economy, but it's also very political. So it's holding around about $89, just for the record. This is the chart of copper on a 6-month view. You can see how it's kicked up very sharply in the last 4 or 5 weeks. So very positive sign there. Strategy wise, unchanged from what it has been now for quite some time. We still need to be highly selective. This is not a rally that's lifting all stocks, so you still need to exercise care, but the focus is on the premium gold producers and non-resource businesses that have got the sort of superb financial performance that I've described in a number of videos over the last 6 or 12 months. Now, just again, for investors, this really is a fantastic time to be moving. If you're not active in the market, if you're apprehensive about what's going on around the world, then this is a time to start to do something positive in the market. I think we've got a terrific period ahead of us for selected stocks, and to me it just doesn't get any better than this. And there is an offer to join our group and benefit from what we're doing in that group, and that's been well publicized through various means. So that's it for this week. As I said, it's a pretty good period. I'm very excited about the upcoming 3 to 6 months in the market, and look forward to continuation of this rally into Christmas. That's it for this week. Cheers.